old banks versus new banks, right? So we're seeing right now the world is finally realizing what banks are and what their business model is. And now we're all looking at our banks and saying, how safe is our money inside of banks? So, what I want you guys to understand is the old world of banking, traditional banking, and the new world of banking, which is called decentralized finance, right? So I want you guys to understand all the parts of it and to start to understand them and start to try to use them because this is a major shift in history that was already underway, but now we actually as a global community are now in a position to actually use these new technologies and make sure that our money is safe, And again, I'll talk to you about all the risk and everything, but the truth is if you're thinking about if you're worried about your bank and how safe is your money, if you have under 250K in a bank, you're pretty safe, right? So that's one thing that, I know it's a certain level of person, but still, even having your money in a bank, there's many different things that most people don't understand about the banking system that I want to basically make sure you understand, right? So if we look at the differences, let's just start with the differences. So a regular bank, you put your money in, they take your money, they lend it out, and they have about 10 to 20% of actual customers' money on hand at all times, right? So the difference between a traditional bank and a decentralized finance bank is when you put your money in a decentralized finance bank or you hold your own crypto, you have access to 100% of your money at all times. Okay, so that's a major difference, right? Because the business model of old banks is put bring your money in our system and then we are going to use it to try to make as much money as possible. So because of that, we don't really have your money on hand. We need to use it in other things, and that's what just kind of screwed up the economy, which is they needed to put their money into bonds to make more money because that's how they make their bonuses and everything. That's their business model. And then the interest rate on the bonds of the new bonds that were being created were higher than the old bonds. So what that means is when they needed the money because people wanted their money, they needed to sell the old bonds and they were going to lose money, like billions of dollars. And that's what happened. That's what happened with the bank runs. When people start taking out the money, there's not enough money in the banks. So banks go out of business because your money is somewhere else. When you give your money to a bank, it's no longer your money. It's an IOU. So when you give your money to a bank, they're lending it out. They're investing it and much more than you even have. So when you need it, they can't give it to you as fast, right? So that's old world. New world, when you bring your money into a crypto bank, unless you want to do other stuff with it, which you can, your money, your 100% of your money is there at all times. So if you need it and you need to pull it out, you can do that without having any issues. In 1 second, you will have your money. So that's a very big difference. Of course, there are differences in where that money is. And that's where, I'll go through all that. But the truth is, access to it is instant versus access to your money in a bank is not instant, right? Because maybe have heard of situations where people go into a bank and say, hey, I want to take out a certain amount of money. And a bank will say, you need to give us more heads up than that. You need to give us a few days to take that kind of money out. I've heard as much as $25,000. The bank is like, well, I need a few days to be able to take that. I haven't had that situation. I've taken out big chunks of money and not had that situation, but I've heard more and more recently that is happening. But this was even before what just happened with the bank runs. So imagine going into your bank trying to take out the money. One lucky thing is now you can just wire the money out. But again, that's not instant, right? There was a big problem last week with a lot of companies trying to wire money out and then the bank closing and their wire never went out. So luckily the government bailed out the banks. Okay, well, let's not call it a bailout because technically there was an insurance in place to protect against these things happening, and that's what they're saying they're drawing on, this insurance. The problem is I don't believe that there's no way that we are not going to feel the extra fees that are going to be needed to cover these costs, because insurance is a monthly bill, right? If you get into a car accident, your insurance goes up, right? So I believe the insurance premiums on the banks for this new insurance is going to go up. And what does that mean? They're going to have to charge the customers more somewhere to pay that higher insurance, right? That's business. Whatever our costs are, the customer has to pay it, or this is not a business. And of course, banks are very, very good at charging customers, and that's why they make so much money. So they're definitely going to figure out how to make us pay for that, in my opinion. So that's the old world. In the new world, crypto makes money. Crypto banks make money because they also lend your money out. If you put your money in a crypto bank, they also lend you your money out, but they're lending your money out at a lower it's called over collateralized loan. So like if I wanted to borrow $1,000, I need to have more than $1,000 in the bank. So they have no real risk, because if they lent you that $1,000 and you never pay it back, they're going to just keep your money. So they can't really lose, right? So they do make money on borrowing and lending, but they don't take your money and invest it somewhere else. And when we talk about crypto, there's a big thing that I always want to say. Everybody thinks of FTX and says, "Oh yeah, but look what FTX did." FTX was not true crypto decentralized finance. Decentralized finance means there is a public blockchain with the wallets of these organizations, so you can see what they're doing with the money. Traditional banks, nobody knows what's going on with the money until it's too late. Not even the government. So, well, in some cases, like, so for instance, with this SVB stuff, just 2, 3 weeks ago, SVB was rated one of the top banks in America. And they were checked, had a clean bill of health, and everybody was like, this is an amazing bank. Within 2 weeks, it's gone. Right. So again, and I know for a fact the people who banked with them, the startup founders, the VCs, did not know for sure how bad their situation was until it was almost too late, and most people once it was too late. When you look at decentralized finance, they have 24/7 you have 24/7 access to the data of that bank, and you will know what's happening with that bank. And again, us as users, we are not only users, we are also investors in the bank, and we get to vote on what happens in the bank, right? So the idea of traditional versus decentralized is you have access to the data, versus in the old world we have no access, we don't know what's going on, so we have to hope that the government and the banks are doing what they have to do for us, right? So that's a major deal, right? When you look at what has happened in the past with 2008, and now, those things happened when the banks were left to their own devices and were trying to make as much money as possible. And then what happened was, after 2008, laws changed to make them not do as much of that kind of stuff, right? So they were supposed to not be investing as much of users' funds. And what happened was, not to get political, but when Trump came into office, he changed that law. So he made it so the banks could again go back to doing more risky stuff with your money. And that's what happened. Basically, as soon as they were able to, they went in further to make more gains. But then what happened was COVID started to make it where we needed to print up a lot of money. So those banks became risky in what they invested in, right? And then it all came to pass this last few weeks. So okay, so those are two major differences. The fact that they're so public in the data on the decentralized finance world, that's why it's decentralized. There's no one entity or one person that control what everyone sees, versus old banks, that is 100% what happens, right? Like, we don't know what's going on with a traditional bank at all until it's out of business, and we find out the true story later, and that's major different.